Good morning. It's our first session on accounting quiz, accounting questions. You'll be, interested, because to know the subject, we need to have some sort of a, what we call it as a quiz or a test, which will help you to gain the knowledge. That's the reason. So here we have 4 options for each question. Okay. You have to, whatever the answer is there, you have to put it in the chart box. After that, after putting in the chart box, I will explain you. First one is amount received or receivable against sale of goods is which one? Revenue receipt, capital receipt, sometimes revenue receipt or a capital receipt, or none of the above. You can put it in the chart box, please. All of you, just fast. All of you. No raising the hand. Please answer there. Please answer there. You put it. Okay. Yes. You see one thing. What we do, I'll give you the number. First one, revenue receipt. Number 1, capital receipt. Number 2, number 3. Sometimes revenue or that is number 3, and none of the above is 4. 1, 2, 3, 4. Like we'll take it. Yes, sir. Okay, now I'll give you the answer. So that is called as a revenue receipt because main business of the organization is sale of the goods. Sale of the goods is your whatever the amount is received or receivable is called as a revenue receipt. Next one. Question number 2. Expenditure of a revenue nature that gives benefit for more than one accounting period categorized as number 1, deferred revenue expenditure, number 2, capital expenditure, number 3, revenue expenditure, number 4, none of the above. Put it in the chart box. Number 1, deferred revenue expenditure, number 2, capital expenditure, number 3, revenue expenditure, number 4, none of the above. Please, it is a very, very important one. My God, okay. Yeah, interesting question because it is a very, very important one, which I wanted you to. Chapani, it is, I will also explain you. That's all. Which one? So, many of you have mentioned capital expenditure, revenue expenditure, or this thing. No one has mentioned about. So, shall I give you the answer? Answer is first one, deferred revenue expenditure. Hello. First one is deferred revenue expenditure. What is the deferred revenue expenditure? Mean to say expenditure is postponed. I told you, I think. If I spend like I'll give you example. Example of I'll give you, on the openly. If I'm spending on the advertisement, it is called as a campaign advertising of a new company. I spend for it 10 crores. When I'm spending for 10 crores, is it for 1 year or for 5 years or, isn't it? How many years like it? It is more than 1 year like. That's the reason this expenditure is spread over to future years also. It is called as a deferment means what? It is a postponement. Postponing the expenditure. That is called as a deferred revenue expenditure. You can check up your books also. As an accountant, you should know it very well. Okay? Shall we go for the third one? So next time onwards, we will have the quiz online and we take the marks also for each candidate. How do you do it? Okay, next one. Number 3. Purchase. Purchase refers to the purchase goods for sale, assets for the factory, stationery for the office use, none of the above. Purchases refers to the purchase of, because what we call it in the company, normally purchases and antam manam. Avuna kada. What do we say that purchases mean to say? Yes. 1, 2, 3, 4. Which one? Normally purchases, we call it as a purchases and sales in case of your peer. So it is which for that? It is called a no. Okay. Fast. It's very good. Yeah. Purchases refers to the purchases of goods for sale. Number 1 is the correct answer. Number 1 is the correct answer. Sir, I request you, Mustafa, you are always keeping your. I'm getting the disturbance, please. That's the reason. Next one. We'll go for the next one. Number 5. It's a very, very important. A liability arises. Liability, how it arises, how it comes. Because of credit transaction, cash transaction, cash as well as credit transaction. None of the above. 1, 2, 3. 1 is credit transaction. Number 2 is cash transaction. Number 3 is cash as well as credit transaction. Number 4 is none of the above. Please, all of you, put it fast on the chat box. All of you, because I want the answer from all of you. Now onwards, we don't give, because we here all the students, we should have the, you have studied all these things in your BCom for how many years? 3 years, please. Am I asking you for high-level questions? Please. Liability arises because of credit transaction, number 1. Number 2, cash transaction. Number 3, cash as well as credit transaction. Number 4, none of the above. All of you have not replied. Some more? Put it, please. Okay. Except one, I think, you see, it is called as a, Madam Hemalata Garu, you are mentioned as a number 3. No, it is a first one, credit transaction. If I receive the cash for a sale, transaction is closed. If you go to a shop, buy the item, I'll pay you the money. Sir, I'll pay you the money after a month. Mean to say what? It is a liability. Mean to say, isn't it? So it is called as a liability arises only for the, only from credit transactions. Okay? Oh, these are all the small things, small bits like, but it gives us a lot of our fundamental knowledge in the subject. That's what I wanted. My students they have to be strong in the subject. I request. Next one, can we go for the number 6? Yeah. Bank overdraft. Bank overdraft. Number 1, short-term liability. Number 2, long-term liability. Number 3, contingent liability. Number 4, none of the above. It is a very, very important question, because you see normally what happens if we are in the computer part of it, these are all the things, computer, you are doing only the data entry, but until unless you know this subject matters, how do you put it in the proper place? As the balance sheet will go in a wrong way. That's the reason we should know as a thorough accountant all these things, all this terminology. Number 2, somebody has put number 2. Number 3, number Hemalata Garu has put number 1. Hemalata, and next Santosh Kumar, number 1. Next one, Tarun, number 2. Tarun, you appears to be an experienced man, I know, because you had this thing. But how do you make the mistake? You have made a mistake. Radhika, 1, yes. You see, one thing, bank overdraft, it is taken as a temporary loan. It is called as a short-term liability. Answer is short-term liability. It is number 1. See, normally if you go to the bank, if your balance is less, you say that, sir, I wanted my check to be passed. Request the banker. He said that, okay, I'll give you, for to pass this check, I'll give you some this overdraft, which will clear your check. That's called as a temporary part of it is a liability. It is a given by the bank. It is a offer or a facility. It is called as a bank overdraft. Is a short term. Immediately have to, they won't give you for 3 years or 4 years. It is only for a temporary. That's called as a short term liability. Can we go for the next one, please? So now I'm requesting your 22 participants are there in the chat box. I want all of you to answer. Next one. Which of the following one increases capital? Which of the following one is increases the capital? Drawings, number 1, drawings. Number 2, loss. Number 3, profit. Number 4, none of the above. Okay. Next, all of you. Number 3, yes. Sundari, yeah. Number 3, Chapanika. Nitya Garu, number 3, yes. Rakesh, number 3, yes. Naveen, number 3. Radhika, number 3, yes, 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 yes. Profit, yes, yes, yes. I'm very happy, all of you. This part of it, yes. Profit increases the capital because profit is added to the capital. Am I correct? That's the reason. Very good. It is. Next, shall we go for the next one, please? Yeah. Next one. Yeah. Which of the following is not a long-term liability? Yes, it is your company law. This thing subject like which of the following is not a long-term liability? Creditors. Number 2, debentures. Number 3, term loans. Number 4, capital. Yeah, these are not a long-term liability. Yes, yes, please. Yes, please. Number 3, Rakesh. Number 1, let me 3, 2, 1, 1. Term loan scenario. Number 3, yeah. See, one thing I wanted to, all of you. Okay, first after the answer, I will explain you. Yes, yes, somehow. It is wait for the. Yes, please. Santosh, debentures. All of you. All of you. Look here. I want to explain you. Many of you may be confused here. Sir, capital is a liability. Yes, mean to say, as you know, as per the rules of the accounting, going concern, they call it as it. What I mean to say that business is separate. Prakash is separate from Prakash and the company. Capital, whatever the business has taken, company has to give back the capital at the time of closing. So that's the reason capital is a liability of the firm to the owners. Am I correct? It is not a capital. It is given as a fixed capital, and then it is not a okay. It is not a. It is a long term liability. Like it is not a immediately capital owned. We don't close the company immediately. Next is I'm coming from term loan. What is a loans? Term loan means to say that loan is given for the particular period, 5 years, 10 years, 15 years. Banks, for the big companies they give. So it is also long-term loan. Debenture, you call it as a debentures also. Debenture is a loan. Debentures are taken by, companies are offering the debentures. It is like a shares issue. Debentures are, it is a, what I mean to say that it is a liability of the company. Debentures also company will say that I will give you after 10 years, I'll give you back the money. Okay, it is a liability. It is a liability on the company. It is for a long term. Now, creditor. Who is a creditor? If we make the sale, if I make the sale, do I ask the party to give me back the money? Give me back the money in a, you say that after 2 years, tell me. If I make the sale, I will ask him to pay it in a, sir, to 20 days you pay, or within a 1 month, which is to be realized in the same year. That is called as a short term, or that's the reason creditor means a creditor for purchases, creditor for any items. Those are all called as a short term liability. So the correct answer is number 1. Hope you are all clear. Am I correct? Okay, now again and again I request you, all of you, to please answer it, whether it is a wrong or a the correct. I am there to explain you. That's the reason I want all of you to participate. Next, which of the following is not an asset? Machinery, sales return, interest received, and purchases. Yes. 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 Okay. You see one thing, machinery is an asset. We can say that machinery is an asset. Purchases, because in the purchases, whatever is the remaining part of it, the purchases also, we say that closing stock and it is also as an asset. A sales return, whatever the sales are returned, that material is coming to us. It is also as a asset only, like, whatever the material. Interest received is an income. Interest received is an income. It is not an asset. That's the reason we have to categorize it in that proper way. Okay. So now, shall we go for the next one, please? Yeah, this is. Which of the following is liability? Furniture, number 1, furniture account. Number 2, rent payable. Number 3, interest received. Number 4, stock. All of you, I think you can answer very well. Yes, Raghu, 2, Mustafa, 2, Radmi, 2, yes, Sundari, 2, yes, Laxi, 2, yes, yes, Rakesh, 2, Naveen, 2, Tarun, 2, yes, Shailaja, 2, Nitya Garu, 2, Radhika, 2, yeah, very good, very good, very good. It is a number 2, rent payable. I have to pay. So no doubt how to identify that. It is called as a liability. Again, I request the participant something saying this. So that's the reason it is called as a liability. Liability, yeah.
Oh,
Madam Nitya Garu, please keep your mic on mute, please. Okay. Next one. Shall I just wait for it? Staying. Yeah. Oh, 1 minute. Wait. Yes, we are again going for the second slides part of it. Yeah. Now, next one, number 11, balance sheet. It is a very, very important question for all of our practical students. Balance sheet is A, statement, B, account, C, report, D, none of the above. Please answer. One, Santosh, one, yes. Tell me, all of you, all of you. Surya Prakash, one, yeah, all of you. Galaxy M24, what, sir? You mentioned, yeah. Next, yeah. Sunita Garu, yeah. Yes, next one. Very good, very good. We have to, yes, I wanted to explain you here. The answer is A, statement number, okay? A, that is number one. Here, one thing, accountancy, what is called as an account, what is called as a statement. Statement mean to say, account, okay, first account mean to say, accounts always come with a to and by. Left side you mention as a debit side to, credit side by. That's called as an account. In the statement, we don't mention to or a by. Balance sheet, do we mention to or a by? P&L account called as a profit and loss account. There we mention to, printing and stationery, to purchases, by sales. It is a, because to and by it is called as an account. Report meant to say it is not, it is the way some information you put it in an organized way. It has got no particular for this performer or something. Next is none. Okay, so now our balance sheet is called as a statement of information. Okay, that's what. Hope you are clear. Next. Yeah, it is also very, very important question for all our students, practical students. Revenue expenditure appears in A, balance sheet, B, P&L account, C, account statement, D, none of the above. Redmi B, Naveen Kumar B, Santosh Singh B, yes B, yes B, yes, all of you, please. I give you the time. I give you the time. Yes, B, yes, B, yes, yes, correct. Yeah. You see, revenue expenditure, it appears in, as I told you, profit and loss account. It appears in profit and loss account only. It is not in the balance sheet. It is not in a statement. Okay. It is called as a balance sheet. Next one. Shall we go for the next one? Petty cash balance, because you are now maintaining the petty cash book. Petty cash here, isn't it? The company interest account, they call it, for a day-to-day expenditure, small amounts. That's cashier is there, petty cashier. So he has got the balance. So that is in the where it comes in the balance sheet, where it comes as in the fixed asset side, B, current asset side, C, liabilities side, D, none of these. Yes, please. Sridevi, B, B. Yes, yes. Inka cheppandi. Yeah. All of you, Tika B. Hemlat garu, C you have mentioned. Yes. D, CB. Who says CB like? No, don't put it like that. B, okay. Current assets. B, current asset. Yes, yes. All of you. Slowly. Surya Prakash, B. Yes, sir. Tell me. Again. Yes, some more. Please. Arvind, B. Yes, yes. Yeah. One thing. Petty cash balance. It is a part of cash balance only. Where does it come? The cash in hand, where does it come? In the current asset. Current asset is one thing. I do want to explain you the difference between a fixed assets and a current asset. Fixed asset meant is a suppose furniture and fixtures. Do we call it as a current asset or a fixed? It is a fixed asset. Why? We cannot realize the money immediately. Those are called as a fixed assets or a fixed in the nature. It is only at the time of closing or after a long time, we can realize the money. If I want to have them. So current assets are the bank balance, cash balances, deposits with it. These are all immediately we can realize it in a cash form. Those are which can be realized within the same year. Those are called as a current assets. So that's the reason. Petty cash balance is a part of the cash balance. It is called as a current asset. Am I correct? Shall you go for the next one? Yeah. Advance received from customer appears as current asset, A current asset, B current liability, C deposits, D none of the above. B says B. Aravind Gaddam says you are C. Yeah, okay. Next. Chapandi. Yeah, tell me. Rakesh, C, 3. Mustafa, 3. Prakash, current liability, C. Somebody says C, D. So many are saying C and B. C and B. What is that? Two participants are raising the hand. If you want to talk, you just open up the mic and speak. Yes. Yes, please. Okay. Hemoglobin. Yes. Okay, now. Advance appears from customer appear. See, customer has paid us the money. Mean to say we have to pay him back. It is certainly a liability. Yes or no? What is a deposit? Deposit means a fixed deposit, all the deposit. So here deposits are not paid up immediately. So now it is called as a liability because we have to pay it back. It is called as a current liability. In the same year, suppose the customer, if we buy the item, we are adjusting for the towards the sale of the item. Otherwise, he will say that no, sir, I want it back. Like have to pay it. It is within a 1 year, same year you have to pay it. It is called as a current liability. What do we call? It is a liability. We have to, it is called as a which liability? Current liability. Deposit is an asset. Deposits are whatever are there, they are an asset like what we have to get. That's the reason. Some. Next. Closing stock is valued at a marketplace price B, cost price, C, purchase price, D, market price or cost price, whichever is less. Okay, Himabindu D. D. Yes, Raghukumar D. Yes. Tell me, all of you, please. Mustafa 2, Arvind 2, Emalata B, cost price. Yes, all of you. Sundari B, 3, yeah, yeah. Yes, 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 D, Shailaja D, yes, yes, all of you, D. Take time, not a problem, please, because I want you to answer it. It is very, very important question. It is a how you are valuing it, and it will affect your profit also. It will affect your profit. It will affect the loans. It will affect the balance sheet. It is a very, 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 very important one. Income tax officer mainly on that only. If your closing stock is a more, the profit will go up. If the closing stock is a less, profit will come down. It's all depending upon the business. So it is a closing stock is a very, very important one. I think I've already explained in our class videos about the valuation of the closing stock. All of you. Yes or no? That one. Okay. Now, tell you. D is the correct answer. D is the correct answer. See, closing stock is taken at the market price. Suppose, look here, I told you in my example, suppose a 20 years back, 20 years back, I purchased a TV, Solidaire TV. At that time, so many Solidaire, Diner, all the TV. So I purchased this. I am having a sealed TV, which I purchased in 2010. I say, suppose 2010, I would have purchased it for 10,000 rupees. It is in the sealed pack. I have not opened it. It is called as a Diner TV. If I put it in the market, how much do I get? How much do I get? Do I get 10,000? Do I get 5,000? Or do I get a zero? I get a zero. Nobody will buy. So if I show in my P&L account in the closing stock value as a 10,000 as a, if I put it, it is called as a fake profit or something because it is affecting the profit. That's all. Tomorrow you are not selling it. You get a 0 paise in the balance sheet so that I'm having actually you see 1 lakh. What I mean to say is you are showing in the balance sheet as a 1 lakh, but is that 1 lakh is realizable? No. So mean to say is your balance sheet is giving wrong. That's the reason. So now what is this thing? So now market price is a zero. Cost price is 10,000, which is less. Zero is less. That is we have to take it. Okay, it is a very, very important one. That's the reason. All of you have to understand that. Yes. It is also very, very important as a practical accountant. Trial balance is prepared as on a particular day for the period. C, for year ending. D, none of the above. Naveen says B, for the period. B, C, 3 for the period. C, B, Redmi 2, C, B. My God, okay. Tarun B, Sundari 2, Aravind C for the year ending. Aravind Sangeeta B, that is for the period. Yes. Nityagaru A, as on particular day. Next one, please. It is also very, very important. Next one. All of you. Some of you are not participating or what? You have to answer. Next time onwards, because we'll keep your all these videos open and then they have to, answer. So we'll take it by each person, their answers. Otherwise, the purpose of conducting the quiz is not, isn't it? The purpose is not, that's the reason somebody B. Here, I think most of you have got a confusion. It's a very trial balance. I can make a daily trial balance. Anuradha, C for the year ending. No, madam. Himabindu garu kuda B. Oh, no, no, no. It is A, number one, as on particular day. As on particular day. You make it because I told you the trial balance as on 30th of June. Trial balance as on 28th of February. Trial balance as an, it is prepared as on a particular day. Balance. Hello. That's a reason. Request, please, I told you, let me, who is this? Let me, please. I told you to, otherwise, we don't want any sort of a this disturbance. So what happens? Trial balance is made as on a particular day. On that day, what are your balances? If I'm showing a 1 lakh rupees as on 30th of November, because I have to receive from the party 1 lakh rupees, and as on 30th of, suppose the 30th of November, I have got a 1 lakh rupees, I have to receive it, I will show. But on the 1st of December, because he paid it on 1st of December, then on the 1st of December, this 1 lakh, it won't appear. Balances will change. Balances gone, change day wise. That's the reason. Balance sheet also prepared as on. Balance sheet as on. Trial balance as on particular day. It is not made for the period. But profit and loss account for the period or year ending, what they do. Okay. If balance P&L account is made for a quarterly or a half yearly, that's a reason. All of you have to keep it in the mind. When you are making the trial balance, I used to tell all of you, make it in the starting, the heading, trial balance as on that particular date. Hope you are P&L account is made for the period, but balance sheet is also made as a particular date. These are all the important things you have to keep it in the mind. Okay, hope you are next. Number 8. Cash in hand appears in trial balance. Cash in hand appears in trial balance. A, debit side. B, credit side. C, both the sides. D, none of the above. B, A, yes, yes. Sangeeta A, Rakesh A, Arvind A, Nityagaru B, Sridevi A, Vijaya A, Sundari A, yes, A, yes, 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 Shailaja A, Satyareddy A, yes, yes. Anyone? A, correct. Okay. Now, see, one thing is that cash in hand, always cash in hand, cash at back, always appears in debit side of the trial balance. Debit side of the trial balance. It won't appear in credit side, okay? Both the sides it won't. So the thing is that you have to mention answer is A, debit side of the trial balance. Okay? That's all. Next one. Next one. Deferred revenue expenditure item. Okay, deferred revenue. What is a deferred revenue expenditure. Some example is given down. So when in that, which is called as a deferred revenue expenditure, which we explained in the previous videos also about the deferred revenue, salary advance, company heavy incorporation expenses, advertisement expenses, none of the above. Which one? Yes, somebody says yes, advertisement. Yes. See, Sridevi Garu, advertisement. Yes. Yes. Sunita C. Yes. Tell me, Sangeeta C. No, Surya Prakash C. Santosh Kumar B. Yes. Yes. Okay. See, I told you, always heavy expenditure. Advertisement, I said, just a, okay, salary advance is not a deferred. What is the deferred revenue expenditure? First item has to be a revenue. Revenue expenditure and ఏంటండి? What is a revenue expenditure? I told you also. You see, look here. 3 persons are there. I have a B, C, 3 persons. So one person is a 3 persons are having 10,000, 10,000, 10,000. Look here. 3 of them have got a 10,000, 10,000, 10,000. One person with 10,000, he purchased a table. He purchased a table. Other person, he has spent 10,000 for his friends for a party. He has spent for a birthday party, he has spent it. Now, other person has spent 10,000 rupees he has given to his friend as a hand loan. Given to friend as a hand loan. Now, out of the 3, which is the revenue expenditure? Table was first one who purchased with a 10,000 table. If he sells it in the market, I don't want the table, he will sell it in the market. He is not a 10,000, he may get at least a 5,000 rupees. Who paid as a loan? Other person who paid as a loan. He will get back his loan amount I have given it to my friend. He will give me back. But this who has spent it in the hotel, can he get back a single pie? That is called a revenue expenditure. Once you spend the money, which you cannot recover it. As I told you, revenue expenditure nature is within the 1 year. If I pay for auto fare, do you agree? Isn't it? These are all the expenditure which will last only for a salaries I pay only for a month. These are all taken for a 1 year expenditure. As I told. Advertisement also I do. Okay, for the 1 year or the regular advertisement, which I said, if we are spending heavy advertisement in a more than a, isn't it heavy amount for a future part of it, those are all called as a, it is not for 1 year, it is for 5, 6 years, then we call it as. That's the reason here, advertisement expenses he has mentioned, he has not mentioned as a heavy advertisement campaign or something. So it is not a deferred revenue. Which is deferred revenue? Company heavy incorporation expenditure. When I'm starting a company, I spend on a, share expenditure, to give the advertisement, everything. That is when the starting of the company, I have spent a lot of money. It is not for 1 year in the future years. So that the expenditure has to be written off in 5 years or certain thing. Then it is called as a deferred revenue expenditure. I cannot write off in 1 year. I have to write off in the future years also. Correct? Okay, now we'll go for the next one. We are going to end shortly. Yes, bookkeeping and accountancy, both are same, true or false, A and B. Answer? Answer? Okay, false, Santosh, false, yeah, false. A, yes, B, A, 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 Satyareddy B, Sunita Garu A, false, yes. Okay, okay. Any more? Any more? Yeah, A, okay. K Vijay A. I have already explained you. I will also show because my videos are there and bookkeeping and accountancy. See, one thing is that correct answer is A, false. Because bookkeeping and accountancy, as I told you, because when the people are gentlemen, so now the thing is that bookkeeping, keeping, keeping or maintaining the books of accounts. I have maintained cash book, sales register, purchases, all these are all called as a books of account. I have to maintain books of accounts, but whether I have maintained all books of account correctly or not. Party has paid me 10,000 rupees. I have entered in the book as a 1,000 rupees. Then the party will come and ask me, all these things are so whatever you have maintained, but whether all these figures by wrongly in the cash book, I have made it as a 10,000, but in the party's account, I've said it as a 1,000 only. Mean to say, have you maintained books properly? All the balances are correct. How do you tell me? Then you have to have a as per double entry system of bookkeeping. All debits have to tally with the credits. So how do we do? That's the reason we make a statement called no me, Mr. Sundakar. I'm explaining it here, please. Okay? Don't. So that's the reason here. What happens? We will make a Videv Garu. Videv Garu, please mute your. Please, yeah. So that's the reason here what happened. Bookkeeping means keeping or maintaining the books of accounts, but with a what we call arithmetical accuracy. And all the figures are correctly posted. All the amounts are correctly posted. Then only the trial balance will tally. Most of you in our course, we have made many trial balances. When the accounts are correct, I used to see you, what people have been, sir, my trial balance is not tallying. I am saying that, no, please check up that postings, everything. So that's a, once the accounts are correct, trial balance will tally. Trial balance meant to say that is the bookkeeper, what we call. So that it is all the accounts are, this correctly entered meant to say it is a, proof is that this trial balance is tallied. That's the reason. Okay. Next one. So accountancy comes after the bookkeeping. Accountancy comes after the bookkeeping. From the trial balance, you take P&L, you make P&L account, balance sheets, cash flow, fund flow. All these things are called as a, all these things are called as, what we call it is a, accountancy. Okay. Accountancy comes after the bookkeeping only. Yes. All of you. So now we have yeah, one more. The last one is there. Almost time is up. Journal and sorry, here some spell you don't worry. Journal and journal proper. Both are same or different again. Journal and journal proper. Both are same, true or false. Yes, 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 yes. Good, 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 good. Yeah. Very correct. Very correct. You see, one thing I used to tell about this is also most important because so many companies now they call it as a you go to MNC company everywhere say that journal and journal proper both are different. Journal is called as a the name is that if you can go to the dictionary and check it up. Journal and journal proper. Journal is like a day book. Day-wise transactions. In the olden days when the accounts started, they were not having sales register, purchase register, because transactions were very less. That is the reason they used to have sales, purchases, everything, bank, cash, everything. They were having a one book called as a journal. They were passing through journal entries. So, like if I'm depositing a cash in the bank, am I correct? I have to say that on the bank account debit to cash. I am getting the receiving. So like that everywhere, if we are any sale, I am doing the sale, isn't it? I am doing the sale means cash account debit to sales account. If I am in the purchases account, like if I am giving a credit like a purchases are, I will say the purchase account debit to Rama and the company. Like this, all, through the journal entry, they were not, instead of maintaining all the books, they were having a one book called as a journal. They were maintaining all these two entries, all the transactions, sales, purchases, cash, everything. Now, nobody is maintaining journal. Because in place of journal, all the books have come. Now you are maintained in Ajay Furniture, sales register, purchase register, cash book, bank book, all these things. Those are all called as it. So now nobody, journal proper. So this journal proper mean to say, when you make the accounts, there are normally, if you make any mistakes in the books, you cannot go back to and make the changes are now. So that's the reason once the entries are made, make it like that. But if there are any rectifications through adjustment entries, rectification entries, transfer entries, P&L account, all these things are a pass through, journal, and it is a book called as a journal proper. Journal proper is a different, journal is a different. Both so nowadays you go to any company, they call it as a journal. The full name is called as a journal proper. That you have to keep it in the mind. If you go to the interviews, you have to. Okay. With this, we have covered actually 20, the questions on accountancy. We will further take up, and I want you to update your knowledge and practical accounts. It's a very, very important one. Everything depends on this. Okay. So all of you, now you can open up your mics and you can say that how did you feel? You can give your opinions. Please, you can open up the mics, please. Chapandi. All of you. 5 minutes time is there. How did you fire? I mean, if you have any doubts, you can just ask me on these questions only. All of you. Hello. All the participants. Open chained mics, so please open up the mics and talk. Yes. Yes.
Sir, very useful it is.
Okay.
We gain more knowledge, sir.
Okay. Thank you. Thank you.
Thank you, sir.
Thank you. Any more questions? Somebody in the participants, they raised the hands and all, they can now talk to me. Please, because in these sort of a meetings and all, don't be, all are, they cannot wait. So please be faster and then speak out if you have the. Yes. No more doubts? No more doubts? Hello? Okay. So now we thank you all for the program, and we'll keep So conducting in the future also, but okay. Thank you, one another. Good day. All the best. Thank you. Thank you. Okay. Thank you.
Thank you, sir.
Thank you. Thank you.
Thank you, sir.
Thank
Thank
you.
you.
Thank you. Thank you. Thank you, Babu. All of you. Okay. Good day. Happy Sunday. Thank you.